I don't even know what's real anymore. I heard this Bitcoin ETF was approved and then it wasn't. Now it is. What's going on? Actually, it's real. We're going to tell you about it right now. So we all know what Bitcoin is, especially if you're watching this video. It's a digital asset. It's the first major cryptocurrency that everybody's gotten into. And there's been a lot of talk about the spot Bitcoin ETFs. In the last couple of years, last number of years, there have been attempts by many companies. I think I remember Van Eck being one of the first ones to get a spot Bitcoin ETF approved. So what does that mean? Well, an ETF is basically, it's an exchange traded fund, and they will hold a product like, say, gold, right? They hold physical gold, and then they will put that on an exchange for you to trade shares in the company. So let's just say ABC company holds this much gold. Let's say it has $1 billion in gold. And then you have the ability to purchase a piece of that so that you can experience the gains in gold or the losses in gold if you're not so lucky. There are arguments out there that say perhaps they don't really own the gold, or, there's a lot of conversations in the background that are among, the conspiracy theories, and we're not going to get into that today. What we do know is that the gold ETF, when that started back in 2004, that actually caused, I want to say it caused gold to go up a lot, but gold actually went up in the following years about times 4 and is continuing to go up afterwards. And there are those who think that putting gold into an ETF is the reason why that happened. What it does is it essentially gives investors the ability to more easily invest in an asset class than they used to be able to. It's a little easier than just like going to the coin shop, buying a piece of gold and holding it and having the risk of having it in your house. Maybe you'll lose it, maybe somebody steals it. This is something where it's actually in your portfolio. You can just buy it like you would buy a stock. And that's why this is very attractive. And it's also very attractive for large finance companies that can charge fee-based income for such transactions, right? So we have had futures-based ETFs over, I think, for a number of years now, and futures are not spot. Futures are a derivative. A derivative, which is in it's in our beginner trading video where I talk a little bit about derivatives, but basically it's where two people, they're going to financially act as if they traded something. They're going to trade as if they traded gold, right? They're going to financially act as if the trade happened. One person's going to take one side of the trade, the other person's going to take another side of the trade. The gold is not truly part of the trade, although there are those who would argue that it is in a certain way, and it gets really, really complex. But the point here is that this is a spot ETF where supposedly these companies all actually have to own some of the gold. Like if you have a $1 billion exchange traded fund, then they're supposed to have $1 billion of gold or something along those lines. Now, whether or not they really have, it's another story, but the market's going to act as if, and so we will trade as if. And the theory here, in part at least, is that these exchange-traded funds will be creating a lot more scarcity in Bitcoin because they're going to have to buy large amounts of it in order to run these exchange-traded funds. And when you buy large amounts of anything, you essentially are making the market far more thin. Let's just say there's $1 trillion in Bitcoin and you own 90% of it, well, now it's way more scarce. There's a lot more people chasing way less Bitcoin, which tends to push the price up. So that being the case, we're going to go ahead and take a look at a couple things. Now, we did cover this yesterday briefly. There was a fake out where somebody supposedly hacked into the X profile of the SEC, and they said it was approved, and it really wasn't. And that caused some pretty wild price action. However, today the approval was real, although Gary Gensler did begrudgingly approve it. In fact, we're looking at the screen right now at an article on CoinDesk. The article is titled, Gary Gensler's Begrudging Bitcoin ETF Concession. We did not approve or endorse Bitcoin. The SEC chair said a court forced his hand and that the agency's decision to greenlight a spot Bitcoin ETF does not signal support of that or any other digital asset. And he goes on to say, we have to do this because it's the most sustainable path forward. He's saying like he kind of doesn't have a choice, basically. He says we do not approve or endorse Bitcoin. It's primarily speculative, volatile, used for illicit activity. Of course, all the buzzwords that you're going to hear from people who are not fans of Bitcoin, which basically what it means is that they want to continue selling their other stuff, and Bitcoin digs into that. And so I'm sure Gensler is being told what to say on that one by people who don't like Bitcoin, and that's fine, whatever. Everybody's got an axe to grind. Everybody's got an angle and everybody's got a master, and he certainly has he's probably got a master who has a master who has a master. But the point here is that he says here, it should in no way signal the Commission's willingness to approve listing standards for crypto assets securities, nor does the approval signal anything about the Commission's views as to the status of other crypto assets under the federal securities laws or about the current state of non-compliance of certain crypto asset market participants with the federal securities laws. What he's saying is we're only approving this Bitcoin exchange traded fund and do not expect any other approvals anytime soon. And we think crypto is not good and we were kind of forced into doing this. So we will only approve this one thing and nothing else that has anything to do with crypto. So very much trying to wash his hands of it. And of course, this is all we'll talk about on that bit of the story. You got further dissenters and that's fine. Now, the original article here that I had up is actually, why are Bitcoin ETFs such a big deal? Gold provides a $100 billion answer. What they talk about is they compare the 2004 listing of the gold ETF, GLD, back in 2004. And what he's basically saying is that it made investing in the precious metal as simple as clicking the buy button in a plain vanilla brokerage account. No vaults or armed guards needed. Now, Bitcoin has other obstacles, right? So when you buy Bitcoin, you got to use wallets. You got to understand how to use a Bitcoin wallet. They make it really difficult to buy Bitcoin, especially in the US. You got to go through certain people and you got to understand how to use technology. And so many people don't know how to do that, but a lot of people still know how to go on to their Thinkorswim account or whatever account you like to use and click buttons. And those people will be able to just buy Bitcoin, or in that sense, they'll have exposure to Bitcoin, right? So basically here, what they do is they compare. They say gold's price more than quadrupled in the 7 years following the 2004 introduction in the U.S. We expect Bitcoin to enjoy price gains of a similar magnitude as a result of U.S. spot ETF approval, but we see these gains materializing over a shorter 1 to 2 year period, given our view that the BTC ETF market will develop more quickly. And that actually came from Standard Chartered. It's a global bank, right? So that's just their opinion on the price. They think that Bitcoin's going to rise to 100,000 by the end of the year. I think that's possible. We're entering into the 4-year cycle bull market, and 100,000 is within reality. I think 85,000 is very realistic. I think that if nothing had changed in the market, if the ETF conversation wasn't part of the deal, then I'd say between 85,000 and 120,000 was going to be my top target for this cycle. But, there are a lot of things changing in the economy, and anything's really possible. 100,000 by the end of the year is well within the scope of reality. And with Bitcoin right now around 50,000, you're talking about a doubling in the price. So that would be a really nice gain for those who had it. Of course, nothing we say is investment advice. Bear that in mind. You got to make your own decisions, do your own research. Investing is very risky, and investing in crypto is extremely risky. That's just how that is. That's why there's such great rewards, because with great risk comes great rewards. We'll move on here. It says, this is what has some crypto observers so enthusiastic about Bitcoin ETFs. A flood of companies, including asset management giant BlackRock, just got approval to offer them in the US. There's hopes that'll bring a gusher of institutional retail money into the investment ecosystem. This following quote came from William Rind, founder and CEO of Granite Shares, an independent ETF company. And he says the first gold ETF undoubtedly changed the industry as it allowed gold to be included in an investment portfolio for the first time. Okay, so that is the ETF look, and it's just a brief overview of how what ETFs are, how it might work out, and I hope you all found this useful. Please go ahead, subscribe, hit the notification bell, do all those YouTubey things, and we will see you on the next show. All right, thanks for stopping by. We hope you enjoyed the show. Come visit us over at our website. You see it on the screen right there. There's also YouTube, Twitter, aka X, TikTok, Rumble. You can zap that QR code or take you straight to the website. I am very active over on Twitter/X. Also, we are live. That's Monday through Friday, 8:30 a.m. EST, right up to 9 a.m. EST. Come stop by, talk to us on YouTube, ask us questions. We're happy to help you out for free. Hope to see you there.